All right, recording 3, video 3 of 3. Lovely company. Lovely company. One of these days I'll tell you the story of my reaction to this company. Okay, rallies into $1 will be met with heavy selling, and that's all I'm saying about it. Folks, this company was literally cheating the investors, right? Fake news, and they're still allowed to trade. They have no sales and nothing but spending. If you're a trader, fine. If you're an investor, I mean, what? This is like not even escargot. This is like eating mosquitoes. Okay. NOC, Northrop. Good support below, so buyers below. As long as they don't lose 454. If you lose 454, you can lose another $20 easy. A bunch of sellers above 485. So I think you have an opportunity of maybe $10 of upside tops. To me, that's too thin. I would rather use options. If it's liquid enough, I would sell a put spread and probably iron condors, to be honest, so I can hedge my bet. But it has earnings in 18 days, so beware of that. That headline is unpredictable. ServiceNow, it's a buy to dip story. Oh my lord. Okay, so maybe we will sell a call spread in that bad boy. Add it to watch list here. Maybe I personally want to short it the way I shorted Boeing. Okay, so this one, if you just tell me what would you do with it, I'd say it's probably going to get to 540 before it gets to 820. Would that help you trade? And I wouldn't want, 17 days there's an earnings report. So forget that. I will not trade it for myself unless I spend a few bucks on the debit put spread, and that's it. The earnings reaction is never predictable in size or direction. So I'm not going to gamble my money on earnings. And unless I get an indication, usually without a headline. But I think, you know what? It might even dip before the earnings. So maybe I hate to do this. I wouldn't sell a spread before the earnings, into the earnings. So what I would do is I would buy a debit put spread for after the earnings, so it holds its value. And if I'm brave enough to sell a credit call spread for 1 week, I can. That's about it. And then you risk the pre-announcement headline too. But ServiceNow, good company. I'm just trading the chart. So this week it has sellers at 696, into 696, and it's easier to drift down to 644. NRG, that is a fantastic chart. Whoa. And it is definitely not an obvious entry point. It is a nope if I've ever seen one. I don't know if I would want to short it because I don't understand the business, and they're doing very, very well. Look at the sales. Whoa. Now that's growth, but then it stopped. Interesting. I don't understand it. If it's cheap, I'll look into it. I've never looked into it, so we'll look into it. I'm not investing in it up here. If you're looking to go long, wait for 40. It might happen. NVIDIA, same exact words, only I do know the business to a degree. I think I did. This is a company that pretty much doubled its sources of income in money-wise. And it's still vulnerable to come down below 380 at some point to fill that giant gap. I wouldn't short it because of that, but if the markets has a hiccup, NVIDIA has a lot to give. Now, I noticed some relative strength last week. When markets were falling out of bed, NVIDIA had a green day. So that means their institutions are still looking to not panic out of it. So because it's a different ball game. So for example, AMD at these levels is not a different ball game. The same sources of money that they had last year to a certain extent is the same this year. So it's inflated. This one, it's not the case. The last 2 earnings reports were almost double the 2 previous earnings reports. So the run rate stepped up by 40% roughly. So it'll still kill last year's performance on a metric basis next year, even if it has a slump. That's why it's harder to fall. But once it starts falling, it's going to be pretty fantastic to watch. So 452 must hold. If you lose that, quick trip to 400. And it's an easy breakout if they want it, about 505. Now, I sent 2 sets of trades for this one, and they both worked out. I would close both. I shorted it once and I sent an iron condor for this coming week. I would be out of that iron condor midweek. I wouldn't be in it at the end of the week. I would book my profits. If you have questions, reach out. Oxy. And okay, so it had a beautiful rally. It died where it's kind of supposed to die, and now it's back halfway, kind of where it's supposed to be. So there's no easy trade here. You have support below 57.50 and sellers above 61. So I think it's stuck. And if I was to say from the volume, looking at the volume that's on my screen, it's easier to drift to 57 than it is to 61. So it will need help from headlines in order to get up there. Path, I was a fan. We traded it on the way up. No way I'm touching it up here. No way. I mean, NVIDIA has a reason to be up here. I don't know much about Path to have the same faith, although the P&L looks pretty strong. So it's just a not an obvious entry point. It can rally to 24 this coming week or the week after. What happens there? I think there are too many sellers at 25. It can curl up and come back down to 20 and a half. Pfizer. Pfizer was a buy to dip into a 20-year-old, a decade old, a 10-year-old support zone. I hesitantly said it would be a technical buy, and not now, although it can get to 30 and a half, but the easy part has definitely been done. So now the question is, how hard are the sellers at 30? Because it can get to 31, but how hard are the sellers at 30? And here's the follow-up. If they get to 31, they can probably get to 32. Okay, now, the buy the dip can work into 27.50. I don't know the business. You should study the business. Palantir, I spoke to a couple people, and one of them went long because I would have done what they did. They committed to a starting position long for the long term. And the way to do it is you sell a put and you say, I'm willing to buy shares at a certain level. And you say for the next year, if you want to give me your shares at a certain level and I'll break even at 13, then I'm in. I like the company. I think it can rally to 17.50 from here and then find a lot of sellers into 18. I wouldn't want to buy naked calls for no reason. So keep that in mind. Buy the dip. If it ever falls into 13s, I'm all over it. You know, I'm finding it hard to get long here when the last time I went long, it was like $8. And it couldn't stop falling. We made a lot of money on Palantir. Philip Morris, good trend, higher lows, tackling 97. I'm going to round. If they take out 97, we have the opportunity to get to 3 digits again. But they need to take that out, and they have a lot of sellers here. So resistance here, maybe target is here. So make sure to do that. And they are buying, so they're doing this kind of a thing. Boop. Let's see. Earnings, 32 days. Electric company. Yeah, I don't know what this is. Oh, that's another dividend company? Yeah, not for me. I mean, this is pandemic levels. Yeah, I don't know what's going on here. The chart is not going to help you. You're going to have to do some homework. Short term, just this the cluster for this week. You go lower than the low of last week or higher than the high of last week. Those are the triggers for this next couple of days. PayPal, I stopped trading it. This descending chop is amazing. If you were to trust this descending chop and it repeats itself one more time, let me see, can I move this one? Look at it. Spike comes up down to here. Here's a spike. Will it do this? Let me make it a little bit lighter so it's not so dominant and scares people. just keep in mind that last time it spiked, it consolidated, and then it made a lower low. Let's do it this way. All right. So let's put a number on the line. 62. Going into 62, there should be a lot of sellers. So keep that in mind if you're chasing or if you're buying calls. If I'm buying calls, I definitely want to give them time, because I think for this week, there's going to be a lot of resistance in here. And this one they need to hold. If they don't, they'll be in here again. This would be a good support zone. So if they do this, they might do that. Okay, so I'll pause this for a second. All right. Whoops. We placed 2 little dots here. We don't need to. So PayPal is, on paper, good business. Worst website on the planet. I do business with them as a merchant, and it's impossible. Every time it's a different website. So I really don't know what the heck is going on with this slide overall. The business is fine. No problem, Vin. The business is fine, but they tell me there's something changing with the Cash Apps, them and Square. So I'm no longer trading PayPal until I understand what's going on. In the same manner, I used to be a seller of puts on all the dips, and now I'm not going to do that anymore, because I honestly don't know what's going on fundamentally. So I could trade the chart, but I'm not investing in it and selling puts. This is Ferrari, and it's an incredible chart if you look at the history. So I'm a fan of racing, and people who like Ferrari are, I'm not going to insult anybody. Anyway, they're big fans of Ferrari, and I have the feeling that's translating into the stock. They literally sell out of every model they make, and you have to like be invited to buy it. I mean, how can you mess up with a model like that? That's like Apple on crack as far as the ecosystem they created. At some point, I think you can't buy a Ferrari unless you own a Ferrari, type of a deal, if it's a sought after car. So it's pretty incredible. So just pick your entry points is what I'm saying, and don't go all in. So if you're an investor and you take a nibble and then it gets cut in half and you double, and you're fine. So good chart. The Restoration Hardware. Sellers, like you wouldn't believe, into 320. Buyers should be unbelievably bulletproof into 230. So that's your zone. Tighter zone, 280 to 240. Hopefully those levels will help you trade. And if you lose 205, what? I said something wrong. Okay, so let's look at it from this perspective. What just happened? Why am I so confused? All right, I'm going to use this 1 hour chart. Buyers at 245, 250. If you lose those, you have backup buyers at 220. And then I think they'll start trying to sell the rally of any sorts. Okay, so what is going on here? Hold on. All right, so rallies into 290, I think we'll find sellers. RIVN. Okay, hopefully my friend listened to me. I have a friend who works for RIVN, and he gets stock options, and he was looking to buy in the open market over Christmas, Christmas party. He said, but what if it goes up? I said, well, what if it goes up? So what's the problem with that? You already work for them, so you invested physically in them. You have stock options, and you want to buy stock out in the open after a 50, 100% rally or whatever the hell it was. Hopefully he listened, because now he can buy maybe 30% more shares with the same amount of money. Okay, so this is a good base for a trade. I think you need to worry about Rivian's bleed. They just, what? 7 billion? Oh, that's a year. Okay, Jesus. Okay, so they burn about $1 billion, $2 billion a month, quarter. Where are they going to keep getting that money from? They're probably going to use their stock to dilute it, to issue debt, convertible debt. So careful with it. Companies they're selling the cars. Can they make enough? And will they make a profit? Okay, it's pretty grim on the P&L. The Raytheon is a better short than a long based on the 2-hour swing. So for the next 3 weeks, it's an easier short than a long. Patience going long. Don't go all in. The opportunity is if it goes above 87, it could get to 91 or 92. That is there. But technically, this red W says that it goes down to 84 first and maybe 83. So the short-term trade is technically bearish, even though they're buying dips. How can the bulls take that off the books? Take out 87. SBUX, and I told you it was close to being a base, but because the market was at all-time highs, that puts it at extra risk. So now it's going to my arrow. But here's the problem. You see all these blue turquoise lines that are aquamarine lines that are going across? Those are long-term moving averages that have anchored at very important levels. And 2 of them were support, 2 of them were resistance, and now all 4 are resistance. 3 are definitely resistance. The 4th is becoming a resistance, this one. So what am I saying? I'm saying that now we have a sell the rally mode confirmed that maybe finishes this arrow, and you have maybe even here. So we are in the hands of the sellers, triggering a head and shoulder-ish pattern that could have this as a target. So SBUX is still headed lower. Sell the rip mode. So here's the opportunity is to buy the dip. Thank you there, dirt driver. So diver, sorry. I would be not okay. I did the marks differently, so let's see here. This area could be a target and support. They're selling rallies, and this is the place they need to take out. So let me rephrase everything. Until they go above 96, they're at risk of bleeding lower to the 89 level. That's probably the simplest way of saying it. I drew on the screen, and I don't think that records for somebody watching at home. That's why I redid it. Okay, and this one, Southern Copper, SCCO. Wait. This is part of uranium, the URA? If it is, it's heavy. So if you're long URA, I don't know if it is. For some reason, I'm thinking that it is. Anyway, if this loses this recent support of 81, it's going to be in here. If you lose that. Meanwhile, you have sellers up here. And this is a line that you need, and this is another line. So it's easier to drift lower. I don't know the business, and the report is not until 25 days from now. So, whoa, what the heck is this? Yeah, no sales, all spending. The chart is not going to... Thank you very much, Broke Boy. I appreciate your conversation, though. Yeah, so technically speaking, this, whatever this is falling into the base. If I'm short, I'm out. If I want to leave runners to lose that and come down to here, that's fine. Shopify, everything I said about PayPal applies here. Great company, probably the best recent history Canadian company, most successful at least from an investment perspective. Short-term volume vacuum, that still is there. So what am I saying with this circle? I'm saying that if they lose this area, it's easy for them to do this. And it becomes right here the target. Okay? They have support. But if for some reason they lose it, because they have a lot of sellers here, resistance. So let's say the market has another bad week, and this one does that, and they lose this support, 71 and 70, there's a vacuum of volume. It's easy for them to slip a lot. So this is where Hindenburg comes up with a follow-up report of sorts. We made money on that one, by the way. It gave us trouble, but we made money. All right, who is this? Slob. Schlumberger. They are selling rallies, right? And they're trying to snap out of it by holding this zone. So I can tell you there's a buyer at 51 and a buyer at just below 50. Those are strong support zones. And but this is also a strong seller zone. So that's the battle. If you can take out this 54.50, you can get to here. If you look left, this was a neckline that was super important, and look how nicely it lines up with this. So support, resistance in general. And if this is going on, then I think we will be here in the next couple of months if they don't take that out. They need to be up here to avoid this. SOFI, not cheap enough. Enticing, that dip was big, but the premiums were not that hot. And just a reminder, we bought it last under 5 and under 6 a couple of times. So for everybody to chase it up here, I was like, what is going on? Again, I offer you the people, anybody in here watching this, member or not member, hit me with a comment in the video. Tell me, hey, I'm looking to go long SOFI. Would you do it now? If I will take it with you, if it was a good idea. But this stock rallied 63%, and I had a lot of people asking me, hey, how about SOFI somewhere up here? Why not here when it was $6? Now it's almost double, and now you want it. So talking about this breakout, they're back to it. That should be support. The question is, what happens here? That should be resistance. And if that comes back down to here, they will have a second entry down here. I'm patient. If I wanted to own SOFI for the long term, because I love the business, and that's good, valid, I mean, it's a good business, nibble, take a third of the position. And if it gets cut down to 6, add another third. Then you would be in somewhere in the middle. It would be like entering at that lower level. So as opposed to piling all in and then it gets cut in half and then you double down on your problem. Not a good idea. Square, everything I said about Shopify, everything I said about SOFI, everything about PayPal is the same here. I like the business. I just don't understand that Cash App thing. And why should I care? If you look at Square, which I didn't realize until last year, 40% is Square, and 60% of the business is the Cash App. What? Yeah, 60% of their business is their Cash App. So you need to know what the hell is going on. I don't have time to research it. So I will wait for this to happen, and if this happens and it comes down to here, maybe I'll trade it. Although I said credit put spread, debit call spread, cha-ching, cha-ching for whoever did this, right? And now it gave us a hard time on the way down, believe it or not. And if you got assigned on one of those credit put spreads, you made bank, right? So we had the right idea. We just got bad timing with the headlines. So not an obvious entry point for me. The closer to 58, 56, 54, the better. And you need to study the Cash App if you're investing in it. It's not about the Square business. It's about the Cash App business. Okay, so this company went from point A to point B. And it's approaching the 61.8 retracement of Fibonacci. That's the golden zone. And it's statistically significant. So if you went long when I told you to go long, I think one of these drops, either this one or that one, on some copper news, like copper being in the, no wait, something along the lines of asbestos being in the lines. Wasn't asbestos, but it was some poison. It and Verizon fell. I said it was a buy. Yeah, copper and whatever. So that was the time to get long. Up here, it's not for me. I mean, the company's in shambles, in my opinion. I don't think they know what to do. The business is not great. Customer service is definitely not great. Not for me. What is this? I don't know what this is. BlackRock, TCP. How can they have this much net income? Wow. That's not BlackRock. That's BlackRock something else. Externally managed, closed-end, non-diversified managed. How do you trade this? Hopefully with shares. Okay, so target 2 is 11.1. You take out 12.4, you get the 13.6. So you have buyers below and an opportunity to get the 13.6, but I think the buyers and the sellers have equal strength here. In fact, the sellers technically have the technicals on their hands. Target, we called the drop, and up here it is not an obvious entry point. So it hit our targets on the way down, and let me erase these lines down here. I don't need those. And this was a notable area. So what I'm going to do is I'm going to put an alert here, because that was a line that worked well. And that is target 2 of that red thing on your screen. I don't think it's coming anytime soon. I would buy the dip of target inside this gap or approaching the gap. It's not real gap here, but anywhere below 127.50 becomes interesting. But you have to respect the sellers. They're selling it for a long term. You also have to respect the fact that this has been a pretty pivotal spot. There should be resistance here, and a lot of resistance here. So if I invested at the bottom, I'm in my exit mode here. TJX, I would most definitely would not be long. I think it's easier to come down to 90 and 85, and not 85, 88, than it is to take out that high. So what you want to do is keep your eye on that line. Why? That was a spike earnings, and keep an eye on this zone. So you're stuck in between that zone, and you're closer to the upper end of the zone. So go long in the below here, support 2. Go long here, and go short there. Exit as a trader. Tesla, I would not hold calls in Tesla. I don't know why, but there are a few things that I don't like developing in the story of Tesla. So it has had an excellent rally. I have arrows that point much higher than here. I wouldn't short it, but I wouldn't hold naked calls short term. This used to be support, and that was a trigger down. Remember, look left on my screen. So now I can't imagine that they're not sellers here. So we'll put resistance, and it's a zone. And if you take out 265, you will get to 275 or 280, no doubt. If you lose 228, you will end up in the teens, 215, 214. Last week, I said I wouldn't hold calls, and it might be in the 220s. So I'm still thinking that. I think rallies will be met with sellers in Tesla. Rallies will be met with sellers. And they may curl down and lose this and end up doing something like this. Okay. I don't know if it has any headlines. You better keep tabs on that. ULTA is also a short of mine. Short idea from the top. I still did not do it. Oh, is this the one I wrote up on Friday? Okay. Huh. Yeah, but anyway. So we will come down into a very big area where there's no volume. What am I saying? So there are no transactions. So it's a weak spot. Weak spot from lack of volume. That's the best way to put it in plain simple English. So if you lose the low from last week, it's easy to go because there's no transactions. Think of this as traffic jam. They don't have to go through a traffic jam. They go straight up and straight down. UNG, we already discussed it when we discussed Boyle. It's a better short than a long here, but I wouldn't short it. This natural gas trade is extremely volatile, and it's very tied to the dollar's movement on headlines. And we have headline. I think we have some reports out this week. So check to see if there's any inflation reports, because they will be triggers for NG, up or down. I don't know. So if it's low inflation, the dollar is going to sink. If it's high inflation, the dollar is going to rally, and this will move the opposite way on the headlines. Okay, so sellers at 6.3 and 6.2. If you rode the rally, I'd be in exit mode. Valero, good range, solid buyers below 124. If you lose 120 for whatever reason, unforeseen now, but if you lose 120, you fall into a more solid set of buyers. Good spike. If I was holding calls, I would have been out. This is a lot of sellers up here. So let's go down into shorter time frame. That is a lot of sellers. All this is resistance. So it's easier to do this than to break out of here or lose the support. So it's stuck here for a while. I wouldn't hold calls. I wouldn't hold puts. VOD, Vodafone. Wow, I haven't heard that in a long time. This here is an exit point. Why? This was an area where they needed to hold and they couldn't hold it, and now they're going back into taking it. They'll probably do this. So if I wanted to get long, I would buy a dip into this zone for them to come back. A lot of sellers above 9.3 as well. Verizon, speak of the devil, I would be out, to be honest. Great company. I've gone long for you many times, and it's kind of a boring stock, and not one time did it lose us money, and that I can remember. And it overcame prior fail super aggressively. That's because when the dollar falls, interest rates fall, and this is an interest rate play, so it's like utilities. It becomes attractive to buyers because it pays a 7% dividend or whatever it is. So up here is an exit point for me. If I'm an investor, I'm just sitting on it that I got it for cheap. If I'm a trader, that's not an entry point. Okay? I think you will have an opportunity in the 38s or 37s soon. If not, that's okay. It's okay to miss out on upside. Warner Brothers. So I think the last time we discussed it, I said you can go on faith if you want to go long. I don't know the business, but it's falling into a support. You want to buy the dip. Twice it worked. So the next time it falls to 10, buy it. It's a round number. And if they take out 12.8, they're probably going to get 16 or 17. So if you're holding it as an investment, I see it. If you're holding it as a trade, I also see it. You do have a lot of buyers and a lot of sellers. I don't know who's going to be stronger. And let's give you lines. 12, first set of sellers. 10.6, first set of buyers. And then 12.7 or higher becomes pretty aggressively bullish. And anywhere inside this zone of 10 is a good set of buyers. Walmart. This is my opinion on Walmart, and so far working perfectly. I said rallies will fade. They took one level, so this one was drawn back here, right? So it's working. So I'm going to leave it where it is. I think it can drift lower to 145. What does that say? Potential sellers. Hell yeah. And they did show up. I guess we can make it smaller. Okay, Weight Watchers, we discussed it last week, and I said it's a better short. I wonder what my comments were. That red thing may have been there. I said unless Oprah comes out with a headline or so. Oh, there we go. Oh, look at this. Those are comments from last week. I said sellers up here, area of resistance, and probably it'll be going to here. And it did that and then some. So now it's hold on to your shorts because this could end up at $4. Yep. So if they don't hold the green, they're going to end up here. I don't know how to draw a shocked face. Oh, that's terrible. I need to practice. Okay, somebody's like, oh. So they better hold. Otherwise, they end up here on Weight Watchers. XLE. So this is two companies. Chevron and Exxon are almost half of it. You have to keep that in mind. So if they have earnings coming up soon, this will be disruptive. XLE is a better exit into 88 than an entrance. So they could get to 89. But I think that would be where I would be exiting my longs in XLE. Now, the mega breakout won't happen until they take out 93. Then you can go to almost 100. They do have a lot of buyers below. So they're stuck in a range. Yeah, that face. And I need to learn how to draw it, though. I see now. 87, the last seller from last week. 83.50, the last buyer from last week. So those are your next triggers. Exxon, there you go. Speak of the devil. 104.5 is an alert to get you $2.50 out of it, $2.50, and or buy the dip into first level of support is 101, second level is 99.5. You lose 99.5, you'll probably lose the 97 mark, although it's a lot of good buyers here. So losing this one might get you below this one in a series because they are selling rallies. Look left. You have to respect that. Yeah, whoops. You have to respect that they are selling rallies. What do I mean? If I take a picture from here to here, it had a really good rally. So this is almost like this. So they could end up down here. I'm trying to give you a visual of how things can break down. It's pretty ugly, but you get my point, right? Okay, maybe this one will do it better from here to here. That's better. This can happen. Just be aware. Again, somebody who's looking for comments on the market, that's YM, that's the Dow. The Dow is still at all-time highs in my book. They can get to 37.9 on this YM, 37, maybe even 38. If you don't take out 38, if you take out 38, you're gone. You can have, the market can rally 2%, maybe even 2.5%, easy. But if you lose last week's low, and you're probably going to get dinged from Boeing on Monday, you're probably going to close. If Boeing actually collapses on Monday severely, you're going to take out this. So you're going to be at 37 in a series of lower lows and lower highs. You do have support at 37.3-ish. So if I was a guessing guy, I would say they would do something like this. This is the better support one. And this comment, I don't know what I did this. I don't know what Monday that was. Probably a while back. Support. Okay, that's YM. Z. I've exited my longs. If you took my position and you didn't exit your longs for green up here, I sent out notes, then you need to read the notes a little bit more clearly. So I took a long based on a friend's recommendation, and it was green, and then it went super red, and then it went to flattish green, and I got out at flattish red. Actually, I took a little loss on. No, small greens overall because I had 2 or 3 trades on it. So that was an exit for me. Now, it was an investment idea. So if somebody held on to it from an investment perspective, yeah, that's fine. It's probably going to come back to 1850. And if it takes out 1950, it's going to like 23. So from that perspective, it is not a bad idea. P&L is good, and my friend does good homework, so I trust him on that one. So if I'm long, I can stay long. If I bought the dip into 16, that is not a bad idea. Now that is a bad idea. I don't understand this P&L. I think it's bogus. And the P&L, not the company, of course. But price action is totally bogus. And this technically should be a base. Let's see if it behaves like a base. If not, there's no say that it's not at 53 in the next 6 months. If they lose this low that they placed here, why am I saying this? Look at it. It moves something crazy. So where is the dividend? This is all about dividends, this thing. And once the P&L, once they don't have enough cash flow, what's going to happen to the dividend idea? Let me see here. Wait. Oh, Zoom. Never mind. I'm confusing the two. Like I thought this was ZM. Zoom, good business. 50% retracement. Should be a base. If somebody bought the dip, that's great. Upside potential 70 short term, maybe. Investment long term, take a half of the position, maybe. Sell a put to own shares. So there's a stock replacement strategy. If you want to learn more about it, I'll tell you what it looks like. If I want to own the shares for the long term, I would sell a put to own the shares at a lower price. Why would I want to do that? I'm saying I'll buy the shares lower. So if that happens, I buy shares here. I don't start losing until they get to here. That alone is a commitment for me to buy shares, and I must be able to buy them. Now, but that doesn't give me any money if it does that above and beyond what I collect to open the trade, and that trade is a credit. So what do? I would buy a leap call in or at the money, and this way, if it rallies, I'm long. So I take this money, invest it in that, and then so I'm long with fractional out of pocket, and I'm protected a little bit. So that's what I would do with Zoom. This is a base. This is a catch the falling knife, but we run the risk of it bouncing and then hitting levels that are pretty significant, and then the market hiccuping. If it does, they might do this. So you want to make sure that this base holds. Otherwise, you will have a 62 entry. I thought for sure Zim was part of the deal here. Maybe not. Okay, so that's why I went down to Zim. I'm curious. Woo, doggy. What the? Yeah, it's back to its own old shenanigans. Nobody asked for it, thank God. They must have announced a dividend of sorts. No dividends? They stopped paying dividends? No way. $6? $3? What is the headline? Red Sea challenges. Aren't they in the business of traveling the Red Sea? That's good for the stock? Huh. Maybe it's shortable. Huh. I'm going to see how cheap it is to buy puts. Lottery ticket. Okay, that's it. We finished all the tickers. Thank you for watching at home. You guys rock for being here, by the way.